In today's video, I'm going to be discussing the Dow Jones reaching 60,000 and the S&P 500 reaching 8,000 within the next few years, and the massive rallies to take these indices up to these incredible levels. I have all the details for you right here in the video. Let's get into it and talk about all the details. All right, now it was just a short time ago that the Dow Jones actually breached 40,000 for the very first time in history, and as we speak as of right now, the S&P 500 is trading a little over 5,300 points. However, there are predictions out there right now on the street where some veteran strategists are coming out suggesting the Dow Jones in just a matter of years here is likely going to be breaching 60,000 points, which would be a 150% increase from where we are right now. And the S&P 500 again breaching 8,000 as well, again about a 150% increase from where we are as of right now. Not bad returns. I'm not sure about you, but sounds pretty good. But let me share with you more details about this because, like I said, veteran strategists are out there suggesting exactly this, and this isn't a matter of just years now. However, the predictions are coming in. By the way, I'm filming this video right now in 2024, so who knows? Maybe you're watching this video right now after I publish this video again in 2024, or maybe you come across this video later on in, I don't know, 2025 or 2026 or sometime, in a couple years from now. Either way, 2024 as I film this video, but the predictions are coming in right now that this is likely going to happen by these veteran strategists by 2030. Well, here's the thing though. 2030, as I film this video right now, is not that far away. I mean, seriously, what is it? 5.5 years-ish, give or take a little bit from right now as I film this video? That's not that far. And for the markets to go up basically 150% from where they currently are right now, and we just breached 40,000 on the Dow a short time ago? I don't know. It seems kind of weird, right? However, not too far-fetched. I mean, think about it. From the lows that were put in way back in the beginning, March or so of 2020, when the market fell something like 34% in a matter of like 30 trading days or something, in about a 1 month time, the markets fell massively, about 30, 33, 34%, something like that, in just the first few months of 2020. That's massive, right? And then again, from the time that the market bottomed out, look how much these markets have gone up since then. Massively, right? All of these indices have gone up a ton, and they're still trading very high, and we still continue to hit all-time highs here on 3 major indices, which, by the way, technically we a lot of times talk about the Russell 2000 as well. That one is not really talked about all that much in the mainstream media, things like this. A lot of the times when you hear people talk about the indices and the markets, they're talking about, the Dow Jones and the S&P 500 and the NASDAQ. However, I like to throw the fourth one in there, which is the Russell 2000. In my opinion, the Russell 2000 is also very, very important, and not sure about you, but I love trading that guy, right? The most volatile of the bunch. Not too bad. Love trading that one. Anyway, by the way, quick disclaimer here. This is not advice in any way, shape, or form. This is not trading, investment, buying, selling, financial, tax advice. This is not advice whatsoever. I'm just giving you information that I'm finding when I'm doing research, okay? I'm very fascinated by the markets. I love watching it every single day. I'm there watching the markets. Weekends, not my favorite time. Why? Because the markets aren't open. I'm bored on weekends, right? You know what I mean? So anyway, just want to throw out that really quickly for a quick disclaimer. All right, but anyway, they're suggesting, now get this, they're suggesting a 60% chance of this actually happening. That's nuts. I'm not sure about you, but a 60% likelihood of this actually happening is what they're coming out and suggesting the likelihood of a 60,000 Dow and an 8,000 S&P 500 in just 5.5 years or so by 2030. That's nuts, right? So by the way, I want to throw this out there really quickly as well, okay? So as I film this video, it's about mid-2024, okay? We also have, what do we have coming up in November? Oh yeah, you know what's coming in November, right? Do you think that this is going to be a massive catalyst for the market in one direction or the other? I can tell you this much, it's going to be, okay? It's going to be a major volatility event with the election coming up in November of this year, right? What direction is it going to take the market? I don't know. I wish I knew, because I can tell you this much. I would just load up in that position and just sit back and relax and just watch the money pour in, right? That's the problem. Well, I shouldn't say nobody knows. I bet somebody knows. I bet somebody knows with a very high degree of accuracy what's really going to happen. But we generally don't know for the most part. But again, kind of depends on what happens here, right? There's a couple different people out there available. Again, I'm not going to get into some political talk here in this video. I don't want to go down that road here in this one. We can certainly open up that can of worms in a separate video if you'd like me to, but this is certainly going to be a catalyst for the market in one direction or the other. And either way, it's going to cause a lot of volatility, a lot of movement, right? And again, if you're in the markets for short-term moves, short-term trades and stuff like that, not a bad thing, right? I love some volatility. It's where some money can be made in short-term trades. However, again, not advice in any way, shape, or form. Please don't trade. It's very risky, and a lot of people lose a lot of money doing that. But my point is, this would be massive for a lot of people, especially a lot of people out there that are, sitting on 401ks or IRAs or just, brokerage accounts that are invested in markets or short the market. Again, that's an option as well. So anyway, just want to point this out. This could be really good for a lot of people if this were to happen. Now, I want to point this out as well because this generally does not get talked about, but a lot of times that we have predictions of like, oh, Dow 60,000, S&P 500, 8,000, massive predictions like this. One thing that a lot of times they don't tell you, and again, I did not see this in any of the research that I was doing when I was researching this and looking in all the details. They didn't tell you that, hey, guess what? You could see the market fall by, say, 30, 40, 50% in a huge down, basically collapse of the market before then as well, okay? So this is one thing that I want to point out as well, is we could see a major collapse of the market before something like this were to even happen, okay? Now, I would say this much, okay? This is based on history, watching the markets very closely for what, like 17 years or something? What? Yeah, since 2007. I started watching the markets very closely in 2007. So, what was that, 17 years ago? Yeah. So anyway, I've been watching the markets very closely, 17 years, actively trading, stuff like that, okay? But my point is, okay, here's what I would suggest. The likelihood of this Dow 60,000 and S&P 500 8,000, in my opinion, has a much better likelihood of actually happening if we see a massive crash in the market. I know that sounds nuts of me to say. You would think like, how? If the market goes down 20, 30, 50, 60%, and then to go back up all the way to these benchmarks of 60,000 and 8,000 for these indices? No way. It's not going to happen. In my rebuttal to that, I would say I believe it has a much higher likelihood of actually happening if we have a massive crash first and then the massive rally. Up to those levels, okay? So I think these levels may be a little bit optimistic, but probably not that really. Just we have 5.5 years, according to these predictions, to get there. I don't think that's far-fetched, honestly. I really don't. But if we continue to do the same old thing that we're doing right now, which is just this melt-up, you've probably heard that before. Some people come out and say, oh, we've got this melt-up, this grinding market. This keeps grinding higher. This is not really a market that just continues to move up. Why? We've exhausted basically all the buyers, right? There's like nobody out there that has any money left to continue to propel this thing up, right? I mean, obviously there's a little bit of money trickling in, things like this, but it's the lack of supply pushing the market down. Does that kind of make sense? Remember, the markets are driven by supply and demand. That's it. Demand for shares, supply of shares. Basically willing sellers versus willing buyers. That's all it is. Supply and demand. That's all the markets are traded off of, okay? I know there's a bunch of people out there that say, oh no, it's all about the stochastics, or it's all about the MACD. It's all about moving averages. No, it's not. These are lagging indicators. They mean nothing. Nothing at all. It gives you an indication as to where price was and what price did. Let's just look at price. Price is indicated by supply and demand. So let's just look at that, right? It's just way easier. Then we can foresee the future with a high degree of accuracy as well. Make sense? So anyway, if we saw a massive crash in the market, here's what I would suggest. In my opinion, I think that would be the massive catalyst to drive these indices incredibly higher. Reason for that is, as soon as we get a massive crash in the market, what happens? You flush out all the weak hands. Now, if you get all of a sudden, you get all these people selling. What does this do? It creates cash positions. You got all these people sitting on cash. The market goes down a ton, and then what? All the large institutions, the big banks, the hedge funds, all of the money managers that have hundreds of billions and tons of money sitting on the sidelines, what do? They buy like crazy, right? And then the market goes up like a rocket ship goes very fast. And then what happens after it goes up, 50, 80%, something like that, then all the retail people come in and drive it even higher, right? So again, that is what you have to see. And a lot of times, when you see a bottom put in a market as well, I mean, think of it this way, okay? If you look at a candlestick chart, first off, when you see the candlestick chart, what do you see? You see a grind higher, right? You see the little green candles going up, 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 up. It's very slow to go up. And then all of a sudden, it looks like somebody pulls the rug out and you see huge red candles going straight down, right? How long do you see the market poke around at the top? Does it just shoot straight up and make an inverted V at the top, like a capital A at the top, and then shoot straight down? No, it usually bounces around the top. Or this saying that many people say is tops take time. They do. Tops in markets take a lot of time. However, when they drop off a cliff, bottoms are usually made very quickly, right? A bottom in a market usually looks like a nice, perfect little V, right? Goes straight down and straight back up. Nice V shape there. And then tops take a very long time. So my point is, when you see that panic selling comes in, creates that nice V-shaped bottom, and you usually get a nice launch pad, and prices go up significantly after that. So anyway, long story short there, just want to throw my opinions in there really quickly as far as, I'd be looking for a massive crash. If we get that, then I would say likelihood of getting Dow 60,000, S&P 500, 8,000 becomes way more greater upon a crash first, okay? If we just grind like this for the next 5.5 years, I mean, maybe we get there, but this grinding market is just annoying. It's honestly annoying. Unless you're sitting in like a 401k or something like that, then yeah, you probably love it. Every day the market goes up a little bit, right? It's fine, right? But for somebody looking at more short-term positions, then, this little grinding business is just like super annoying. Just like, dude, we need some volatility here, right? Anyway, I'm gonna leave it at that for now. I hope this helps you out somewhat. I will continue watching everything closely and bring you the details as they get them. Otherwise, hey, please make sure to subscribe down below, right down below, like right. Actually, it's maybe like right here. Yeah, it's right here. I'm trying to do it backwards because I think I'm trying to think how the video display is on the screen. I don't know. It's right down here somewhere, one of these sides. There's a subscribe button. Make sure to hit that if you haven't done so yet. Thank you. I truly do appreciate your support. Please feel free to share the video with your friends on social media. Otherwise, have a nice day. Take care, and I'll catch you again later in the